All right, welcome back to your favorite insurance podcast, No Dumb Questions, the Insurify podcast where we give you straight talk on coverage, claims, and savings. And I'm Sarah.
And I'm Julia. Today's question is, what factors affect your car insurance rates?
Which also relates to, why is my car insurance so high?
Why did my insurance go up when nothing changed?
So today we're going to break down what actually goes into your car insurance premium, why car insurance is so expensive right now, and what you can realistically do about it.
All right, let's get into it.
Let's do it. All right, guys, we're going to need you to lock in. This episode is going to be term heavy. So here are the basics you need to be familiar with.
It's for a good cause, though.
Yes, for a good cause.
Bear with us. We promise it's going to be okay. All right, let's start with insurance rates. Relatively basic. So insurance rates are influenced by the pricing formula that insurers use to calculate your premium, which is based on risk, which can be based on a bunch of different factors, which we will talk about. But higher risk usually means higher rates.
Speaking of risk is how likely you are to file a claim. So how expensive that claim would be if it happens. That's your risk level.
Yes. Rating factors are the specific details insurers use to set prices. That could be like specific driver information, vehicle information, location, where you live, and even just like market trends, things out of your control but are affecting the industry.
Yes. And hint, hint, we will be going over that in our last episode, which is the next episode. So stay tuned. Incident. This is an infraction on your driving record. So that includes speeding tickets, DUIs, or at-fault accidents.
All right. These ones are new. It's going to be okay. So no fault and tort. So these are very insurance-y terms that we haven't covered yet, but it kind of comes down to how every state approaches insurance a little differently. So some states are no-fault insurance states, and some states are tort or at-fault insurance states. So whether your state is a no-fault or tort state not only impacts who pays for an accident, but can also influence your overall rates.
Yes. So no fault. This is a very flexible definition and it varies by state. So that means no fault is assigned in an accident. Hey everyone, it is Editor Sarah here. I just wanted to add some clarity about no fault states. So there is fault assigned when it comes to physical damage, but there's no fault assigned when it comes to medical damage, which is why it's often common that you have to carry PIP or personal injury protection if you live in a no fault state. But always defer to your state's websites about insurance on what you need to carry and when fault is assigned. All right, back to the show. You file a claim with your own insurance company, not the other person's insurance company. Still get their insurance information if you're in an accident. Premiums are higher in no-fault states because there's often higher payouts and all insurers pay on each accident.
Yes. On the other side, a tort or an at-fault insurance system is one where fault is specifically assigned. So you file a claim, you'll still file a claim with your insurer, but you file a claim with whoever caused the accident.
Yes. All right, so I know we said it's term heavy. We got to extra lock in now because we're going to actually go into what factors affect your car insurance rates.
Yeah, no, we got this.
Yeah.
Many factors go into pricing, including your personal situation, environmental factors, the vehicle you drive, the coverages you have, and those broader insurance market factors.
So how insurers think about pricing. Insurance is a risk calculation. Everything they're looking at, they're asking themselves, how risky is this policy and how likely are they to file a claim? So your car insurance cost is the personal risk plus your vehicle risk plus location risk plus market-wide costs. So rates are based on a formula, but you do have some control. So we'll look at some factors that you can control that affect your pricing.
Yes. And that kind of like equation that Sarah just spelled out, that is what we mean when we say like so many factors go into rates.
Yes.
It's like there are kind of different almost pools, right, of factors that could be influencing costs. So factor one, driving history. This is usually more unique, right? So this is accidents, tickets, DUIs, general infractions or violations that you might have on your record that can tell your insurer that you're a higher risk driver and lead to higher insurance premiums. DUIs, I think understandably, have usually the biggest impact.
Yeah.
And clean driving records usually qualify for lower rates and discounts. So typically driving safely is one of the best things that you can do to lower your rates.
For sure. Okay, so the next one is your age and your driving experience. This is one that we've talked about quite a bit. So younger and newer drivers typically pay more because they're more likely to get into an accident. They're driving riskier. They don't have as much experience. But the good news is your rates often decrease in your mid to late 20s, around 25, as long as you have a clean record. Rates can rise again later in life to an increased likelihood of filing a claim as drivers age. But in general, you'll see your rates decrease as you age.
Yes. Factor 3, credit-based insurance score, with the caveat that not all states allow insurers to use credit history in rate setting for insurance. So, like I said, used in many states, banned in a few. And this is different from a traditional credit score that you might think of when you're like, my credit report, right? This is a little bit different. It takes a few different factors into account to create a credit-based insurance score, which I know really, really rolls off the tongue.
Yeah.
But still, it is a little bit different. So this uses information from your credit profile, like payment consistency, loans you may have, your credit health. And there's a lot of data that insurers have collected over time that demonstrates that credit score can predict how likely someone is to file a claim. That is why typically the better your credit history, not specifically your score, the lower that your rates generally will be.
Yes. And it's also worth noting they only do a soft pull on your credit. It won't affect your credit when you get rates.
Exactly.
Yeah.
Yes.
So other personal factors include your gender. Studies show that men engage in riskier driving behavior more often than women. Your marital status, which I think is kind of funny, but it shows that you're willing to make big commitments and shows responsibility, and also multi-car discount, maybe. Let's get that involved.
That's right.
And then your occupation. So insurers consider professionals who work long, stressful hours that maybe are leaving at weird times of the day. They may get into accidents more. And then also, if you are part of a union, like a teachers union, you might be able to get discounts.
Exactly. All right. Factor 5, location, as we've talked about a lot. So state laws like that no fault versus tort is something that can affect your rates based on where you live, and other local factors like your state legal minimums for liability insurance. For example, Florida has like a $10,000 minimum in property damage versus Texas has a $25,000 minimum. So that would obviously influence your rates. This is why kind of you're even down to your zip code can matter, like living in an urban versus a rural area, right? So urban areas tend to have higher insurance prices due to higher repair costs and increased traffic, which can lead to an increased rate of accidents. Right? There's also higher theft rates and generally like higher claims frequency, which can all contribute to those increased premiums.
Yeah.
And then not necessarily like urban or rural related, but definitely can matter down to the zip code is weather risk.
Yeah.
So whether you are at risk, maybe you're like kind of on that wildland urban interface in places like California where you're more at risk for wildfire damage. Maybe you live in Key West in Florida where you're kind of the front lines against those tropical storms. So all of that, if you're in those more high-risk areas, could influence your rates.
Yeah, because the comprehensive coverage in your full coverage policy would pay for like a flooded car or a car destroyed by a wildfire. That's why. Speaking of car, your car does affect your rates. So your vehicle's make and model, the year of the car, the cost to repair or replace it, any safety features it might have, the theft rates it might have, and what you use it for, whether you're driving for business, whether you're a rideshare driver, whether you're commuting to work, whether you're driving casually. Luxury and performance and EVs often cost more to insure because they have higher repair costs. So insurance rates by car model can vary dramatically, even for safe drivers. So it's worth considering when you're buying a car what the insurance rate is going to look like.
Yeah, it's definitely worth calculating that as like the cost of owning that car.
Yes.
In total. Yeah. All right. So factor 7. Coverage choices. So this is something we've covered, so I'll be relatively quick here, but we've got liability only versus full coverage, liability covering just damage that you caused to someone else or someone else's property, full coverage covering damage to your vehicle. And typically the higher limit you have, basically the more coverage you have, the higher premium you will have. Basically the insurer is on the hook for paying out more if something were to happen. And when you have a lower deductible, which means you have to pay less out of pocket if you file a claim, that can also mean a higher premium, again, because the insurer is on the hook for more. But more coverage does typically equal more protection, which is why we definitely recommend looking into at least those additional like add-on or optional coverages, because you might realize that something could really help you out or be a good fit you didn't even know existed, right?
Yes.
And deductible amounts are something to keep in mind, and something we've actually discussed on the podcast, that one strategy for lowering your premiums is to raise your deductible, but then you are on the hook for that extra deductible, that out-of-pocket cost. So you always want to be thoughtful there.
For sure. And that kind of leads into the claim history, because you pay your deductible when you need to submit a claim, which you would know if you listen to our last episode. So filing claims can increase your future premiums unless you have something like accident forgiveness. At-fault claims usually have the biggest impact, and frequent claims may signal higher risk to insurers, so you might see an increase in your rates.
Yes. And factor 9, which is kind of one of the hardest ones to consider, is market-wide cost increases. These are big. These are kind of above all of our heads, right? So some of the reasons why car insurance is so expensive right now: inflation, rising repair costs, labor costs, and just the cost of auto parts, more expensive vehicles. Newer vehicles in general are more expensive to repair, but also EVs, think those like long-range batteries. If those are damaged in an accident, that's going to be a lot more expensive. Things like supply chain issues, especially in the kind of pandemic era and even coming out of that, really influenced the cost of claims and therefore the cost of insurance. Also, just more frequent or severe weather events, fires, hurricanes, hailstorms, etc. Those can also contribute to kind of regional risk, which can then influence premiums in that region. So this is why that even good drivers can see rate increases. Yeah. It's still true that being a safe driver is what's going to keep your rates the lowest. But that is why if you're ever like, what? Like, why did this go? But nothing happened. There was no accident. There was nothing. There might be other factors going on.
Involved, yeah. So with all these various factors, with some we can control and some we can't, how can we lower our car insurance?
Yeah, that's a great question and kind of why we're here, right? Yeah. So some of the immediate kind of strategies and changes that you can make is, as we've said, to compare quotes. This, it might sound like a line. This is really just about making sure that you have the best deal.
Yes.
That's what it's about. And it can be super quick. If you use like a quote comparison tool online, you can get a bunch at one time. As I mentioned, increasing your deductible can lower your premiums, kind of with that kind of caveat of just be careful to make sure that you do have that in your savings account, let's say, in case you need to file a claim. You could drop optional coverages that you aren't required to have. Maybe you used to have an add-on coverage that you think you maybe don't need anymore. You moved out of a high risk area into a lower risk area. You're like, hey, I can save money. I don't really need this anymore. And ask about discounts. You might be surprised how many you qualify for. And most insurers have like a fair few, and some of them are kind of specific. Yeah. So you kind of like might not know if you don't ask. So it's really always worth asking and seeing what you qualify for. And then some of the more long-term things, which, I understand can definitely present a challenge. If you're in a state where insurers can use credit history to influence rate setting, then it can be really great for a number of reasons, but also for your insurance rates to keep your credit healthy, to maintain a good credit score, a good credit history. And I know that's much easier said than done, but definitely a worthy pursuit when you're able.
Yes.
Another one is to just drive safe, drive defensively, drive carefully. Yeah, that will, like we've said, definitely help keep your rates down. Always consider insurance when you're buying a car, new or used, whatever it is. Ideally beforehand. Usually, even if you don't have every detail about a vehicle, you could probably still get a relatively accurate quote knowing what kind of vehicle, maybe the year, make, and model, because you will have your own information, right, about your driving record. And that will help you know, okay, like if I'm going to get a lease or buy a car and have a loan, like what's my actual monthly cost going to be of like owning this car? Because it will include full coverage if you have a lease or a loan. And then another is to get a shorter term policy, like a 6-month policy, so that if something changes, if life changes, like Sarah said, if you turn 25, if you graduate, if you move, like all these things, right, you will be able to kind of reshop, compare quotes, and get a new policy that might be saving you money even sooner.
Yeah, so those are all really great points. And I'd like to add on a point about considering insurance when you're buying a car. If there's a bunch of different makes or models that you're interested in, Insurify has a ton of articles that go over various popular makes and models. So definitely check those out as you're doing your research.
That could definitely streamline the process.
Yes. All right, let's get into some frequently asked questions.
Awesome.
Okay, Julia, let's get into this.
All right, let's do it.
Why did my car insurance go up when nothing changed?
Amazing. We were just kind of coming off this.
Yeah.
So insurance pricing adjusts at renewal. So even if you didn't change, nothing changed necessarily about your situation, insurers in your area may have updated their pricing models. They may have been paying more claims in your area as of late. They may be faced with higher repair or medical costs. All of these things could be influencing insurance premiums, even if they're not necessarily your fault or specifically pertain to you, which is those kind of market-wide increases unfortunately, are just kind of the way it is. They're a common reason for premiums rise. Typically, it's not a super significant increase at one time, but they absolutely can influence premiums. For example, if there is a hurricane in your area and the insurer had a lot of comprehensive claims because, let's say, a lot of cars flooded, your rate may go up because you live in that area, even if you didn't submit a claim, because they've determined the likelihood that you'll submit a claim is now higher.
Yes, and they've paid out more, so they need to kind of recoup.
Exactly.
Does having a newer car always mean higher insurance costs?
It typically does, but not always. Newer cars may have better safety features, which insurers consider and can lower your risk because they can help you drive safer. But because they're newer, they can have higher repair or replacement costs because of that higher value.
Yeah.
So that's why insurance rates for newer cars might be a little bit higher. But rates by car model do typically depend on both the safety and repair expenses. So you can still get a newer car at affordable rates.
For sure.
Definitely.
Why does my car insurance keep going up every year?
Why does everything keep getting expensive every year? I mean, listen.
The ultimate question.
The ultimate question, right? This is kind of back to those broader macro factors that, long-term trends can drive those steady increases. Things like inflation, affecting that kind of rising labor and auto parts cost, more frequent and severe weather events that can kind of add up over time. That's why even good drivers can experience gradual premium increases over time.
Yeah. Can switching cars lower my insurance premium?
Yes, actually. And in some cases, significantly. Vehicles with lower repair costs, lower theft rates, stronger safety records, lower value, cheaper cars, they often cost less to insure, because again, if you were to file a claim, they present less of a financial risk to your insurer, or maybe there's other data like theft rates, right, that already tell the insurer that your car is lower risk. So insurance rates do vary by car more than many people expect. So if affordability and kind of bringing down your overall cost and expenses is a really important goal for you, looking at the car you drive could really have a big impact on kind of your bottom line.
Yeah, definitely. Amazing job.
Why, thank you so much.
All right. After this quick break, we will be back to bust some myths and give some facts.
I think it's going to be great.
Yeah.
Julia, are you tired of paying too much for your car insurance?
Yeah, who isn't?
Well, here's a straight talk. With Insurify, you can compare quotes from over 120 top insurance companies, all in one place. And you could save up to $1,100 a year, and it only takes about 10 minutes.
No phone calls? No hidden fees? It's 100% online and it's completely free?
Yep. Insurify has already helped more than 10 million people compare, including us. Now it's your turn to see how much you could save.
Click the link in the description to get started today.
All right, Sarah, are you ready to bust some myths?
I am so ready.
And talk facts.
Yes.
Amazing. Okay, so myth or fact, your car insurance premium is mostly based on how good of a driver you are.
Sort of fact, sort of myth. It's definitely one of the biggest factors. Your driving history really matters, but it's only one piece of the major puzzle, right? So location, vehicle type, and overall insurance costs also contribute. So even safe drivers can pay more due to the factors outside of their control. But if you have an incident on your record, it can have a huge impact.
Gotcha. Okay. Myth or fact, two drivers with identical driving records can pay very different insurance rates.
Definitely a fact. Zip code differences can significantly affect your pricing. Insurance rates by car model can also vary a lot. So each insurer weighs these rating factors and your profile differently. And that's why even if you have the same profile as someone in a different state, you'll have a different rate.
Now, Sarah, please tell me if this is a myth or a fact. If your insurance rate went up, switching companies won't help.
Yeah, definitely a myth. I think we know this by now. Insurers use different pricing formulas, so one company may penalize a factor that another barely considers. So comparing quotes can reveal lower prices for the same coverage levels.
Awesome. Thank you so much. That's so helpful to know. All right. Myth or fact? If I was in an accident but didn't cause it, my rates won't go up.
Mostly myth. Unfortunately, they typically will go up, but not as much as an at-fault accident. So in general, filing a claim, no matter what, will increase your rates. That's why it's helpful to have that accident forgiveness. So if you didn't cause it, you don't see any effect on your rates.
Okay, myth or fact? Shopping for car insurance regularly can actually lower your premium.
Yeah, fact. Prices change at every renewal. Like we said, lots of different factors are moving around. Loyalty can get you a discount, but you have to kind of like question, is it more than you could save just by switching? So it's worth checking. Comparing quotes is one of the most effective ways to control your insurance costs. I actually just did this because my insurance is up in like a month and I wanted to check out some local insurers. So I decided to do it by hand and it did take forever. I did get some pretty good rates though. So I'm still kind of like considering, I'm going to see what rate I'm going to get offered upon renewal, but it really can help no matter how you do it.
Yeah. That's so true. All right. And last of all, myth or fact? Incidents stay on your record for the rest of your life.
This is a myth. Incidents will eventually fall off, but it depends on the severity and your state. So your state might use like a point system, like points on your license. Like if you have like an accident, is like 3 points on your license, right? Very severe accidents may stay on your record for forever. So, don't do anything risky. But you can check out high risk insurers in the meantime to see if you can lower your rates until that accident or speeding ticket or DUI falls off your record.
Yeah, that's a really good point and honestly really hopeful. Like a lot of times in a lot of states, some of these minor infractions that you're kind of like kicking yourself like, oh, I wish this hadn't happened or whatever. You're not going to be stuck with it forever. No. It's going to be okay.
It's going to be okay. Yeah. And there's other options. And like, even if you're a good driver, maybe check out these higher risk insurers. You might still get a better rate. Who knows? You
never know.
Yeah.
All right. I think it's time to kick it to our listener action plan.
Yeah, let's do it.
All right. Here we go.
All right, so many factors go into your rates, but there are always ways to save, so don't lose hope.
No, please don't. So review your renewal notice and premium changes. Even if it went down, did it go down enough?
Right. Check your coverage limits and your deductibles, see if they still work for you.
Decide if your car and financial situation still justify the coverage you have.
Compare quotes using either a comparison website, an independent agent, or going on insurer websites.
And while you're at it, ask about discounts like a safe driver discount, a low mileage discount, bundling, having multiple policies with the same insurer, and of course, check your deductibles.
Yeah, and check out our episode on discounts if you want to learn more.
Please do.
Choose a shorter term policy if big life changes are on the way, but still reshop every renewal even if nothing changed.
And I mean, most importantly, please keep driving safe. And as you're able, keep your credit healthy and consider insurance when you're ready to get your next car as part of that total cost.
For sure. All right, let's wrap this up. So the bottom line, car insurance prices aren't random, they're calculated, but it's still definitely frustrating to see it go up even when nothing changed.
But once you understand what affects your rates, you can stop guessing and start making smarter choices on the things you can control.
Right, like you can't control the economy or the weather.
But you can control your coverage, your car choices, whether you compare quotes, and who you buy insurance from.
Yeah, we're all in the same boat, so this is why we're here to help give you guys the insider scoop and get those cheap car insurance rates.
Yes, so please like, comment, and subscribe.
Send it to a friend who's also tired of overpaying for insurance.
Until next time.
Drive safe and save money.
You are listening to No Dumb Questions, an Insurify podcast. This content does not constitute personalized financial or legal advice. This podcast is written, edited, produced, and recorded by Sarah Getman, Julia Taliesin, Riley Hines, and Sydney Harrell. Compare insurance quotes by clicking the link below.